You may think the stock market is a grand puzzle, but it isn't. It's the same thing over and over again, repeating itself like the seasons, like the tides, like the rise and fall of men and empires. That is what makes it both dangerous and profitable. Most of you, perhaps you yourself, keep searching for something new, something hidden, some secret that will unlock the vault. But tell me, if human nature hasn't changed for 1,000 years, what makes you believe it has changed in the stock market in the last 20? Now, there is one rule, a single law of trading that governs the entire game. 99% of traders ignore it. They don't even see it. And because of that, they end their careers the same way gamblers end theirs, broke, bitter, and blaming everything but their own blindness. Do you want to know why? Because it's easier to chase noise than to respect law. Let me tell you something. I've seen men lose fortunes with intelligence, and I've seen dullards grow wealthy by accident of timing. But never have I seen a man last in this business who ignored the law. Do you know what the law is? It isn't a chart pattern. It isn't a line or a moving average. It isn't even discipline, though that is part of it. The law is simply this: prices are never wrong. Your opinion is. I can see the frown on your face. You want to argue. You want to tell me about value, about what a stock is worth, about how the market is irrational, about how it can't possibly stay wrong forever. But have you ever stopped to ask yourself, what is the market? It is the collective opinion of millions, expressed in prices. Do you suppose you, one man sitting at a desk with a ticker tape or a screen, can outvote the millions? The market is not there to agree with you. It is there to take your money if you fight it. And yet, that's what most traders do. They fight it. They say, this stock is cheap. They buy it, it falls lower. They buy more. They call it averaging down. They call it courage. I call it suicide. Have you ever asked yourself why you average down? Because you can't admit you're wrong. You would rather feed your ego than protect your capital. And when you lose, you will say the market is manipulated, or the stock is undervalued, or the insiders cheated you. But the truth is simple: you broke the law. Now here's the part most men never grasp. The law is not just about losses. It's about profits. Do you think the man who makes millions does it by picking bottoms? Do you think he gets in at the lowest tick and out at the highest? That's the dream of amateurs. Professionals don't need the bottom. They don't need the top. They need the line of least resistance. When prices move, they follow. That's it? Sounds too simple, doesn't it? But simplicity is what you despise, isn't it? You want something complicated, something clever, something that makes you feel like a genius when you explain it at dinner. But the market doesn't care about your cleverness. It only cares about the law. Have you noticed what happens when a stock begins to rise? At first, nobody believes it. They say it's overbought. They say it's too high. They wait for a pullback. Then it rises again. They shake their heads. They wait. It rises again. Suddenly they can't stand it. They rush in, screaming that it's going to the moon. That's when it's near the end. Why? Because the law says the crowd must be late. The crowd always is. Do you want to be with the crowd? Or do you want to be with the professionals? Here is another truth: you never fight the tape. The tape tells you everything. It doesn't whisper, it shouts. But you have to stop listening to your hopes and fears long enough to hear it. When prices are rising, the market is telling you something. When they are falling, the market is telling you something. And yet, what do traders do? They argue. They invent reasons. They say, it can't go higher. It's overvalued. Or, it can't go lower. It's too cheap. Who cares what it can't do? It is doing it. Prices are facts. Your opinions are guesses. Which do you trust? Let me ask you something. If a doctor told you not to cross a certain bridge because it was about to collapse, would you ignore him? If an engineer told you a ship was sinking, would you argue with him while you stood on the deck? Yet traders argue with the tape every day. They see a stock sinking, and they say, it will recover. They see a stock soaring, and they say, it must fall. They think their personal judgment outweighs the law of supply and demand written in prices. That is why they lose. I learned this the hard way, as every man must. My first great fortune was made because I listened to the tape. I didn't ask why prices were rising. I didn't need to know why. I only needed to know that they were, and I followed them. My greatest losses. They came when I thought I was smarter than the market. When I let my opinion tell me a stock was cheap, that it couldn't go any lower, I paid for that arrogance. Have you paid for yours yet? Or are you still waiting for the bill? You see, the danger of trading is not the market. The danger is yourself. The market has no emotions. It has no malice. It does not wake in the morning and plot to ruin you. You ruin yourself by ignoring the law. When prices move against you, you delay. You pray. You hope. You add more. You say you're investing, and the market smiles, takes your money, and moves on. Why? Because you refuse to listen. What is the rule that 99% ignore? It is this: the market is never wrong. The crowd ignores it because the crowd must believe it is smarter than reality. But reality always wins. You may deceive yourself for a week, a month, a year. But sooner or later the bill arrives, and it is always higher than you expect. Do you want to know why men blow up? Why fortunes vanish? It is not because they lack intelligence. It is not because they lack information. It is because they lack obedience to the law. Every man thinks he will be the exception. Every man thinks he can ignore prices and somehow win. But have you ever seen a man step off a cliff and float in the air? Then why do you think you can step against the market and rise? Let me tell you another thing. The man who makes money is not the one who is always right. He is the one who knows when he is wrong and acts on it. You think cutting losses is weakness? No. Cutting losses is strength. It is the only strength that matters in this business. The amateurs want to be right. The professionals want to make money. Which are you? And yet, I know as I speak these words, most of you will nod, and tomorrow you will ignore them. You will buy a stock because it is low. You will sell a stock because it is high. You will forget that prices are never wrong. You will remember when it is too late. And then you will say, the market tricked me. But did it? Or did you trick yourself? I once watched a man lose $1 million in a single day because he refused to obey the law. He kept saying, it can't go lower. It did. He said, it can't go lower. It did again. He said, it must turn soon. It didn't. Do you know what he said after he was ruined? He said, the market was wrong. The market wasn't wrong. The man was. And the market doesn't care. Now let me ask you this. Do you want to last in this business? Or do you just want excitement? Because if you want excitement, go to the racetrack. It's cheaper. If you want to last, you must obey the rule. You must never argue with the tape. You must never average down. You must never believe your opinions are worth more than price. You must never break the law. The law is not glamorous. It does not make for clever speeches at parties. It will not impress your friends. But it will keep you alive. And if you combine it with patience, with discipline, with the ability to sit tight when you are right and to cut fast when you are wrong, it will make you wealthy. Not quickly, not easily, but surely. And still, I can see the doubt in your eyes. You think, if it is so simple, why doesn't everyone do it? Do you want the answer? Because human nature never changes. Men want to be right. They want to predict. They want to feel smarter than the crowd. They cannot accept the idea that the market is greater than them. And so they ignore the law. 99% of them. They will ignore it tomorrow, and next year, and 10 years from now. And the market will continue to punish them, as it has punished every generation before. But you, perhaps, have a choice. Perhaps you can be the 1% who sees, who listens, who obeys. Or perhaps you will join the rest. Tell me, which are you? Prices are facts, your opinions are guesses. That is the truth that separates those who endure in this game from those who are carried out. Yet almost no trader wants to admit it. You see, opinions are easy. They come naturally. You look at a stock, you glance at a chart, you hear a story, and instantly your mind begins forming a picture. You say to yourself, this stock should be worth more. Or, that price can't possibly last. But tell me, what is your opinion compared to the price on the tape? Do you think your judgment, no matter how carefully reasoned, has the power to outweigh what is already printed, what has already been decided by thousands of transactions across the world. Every time a trade takes place, it is a fact. Two people have agreed on a price, and that price is reality. Your opinion about what the stock should be worth is irrelevant. And yet, most traders fight the tape every day, clinging to their personal guesses. They would rather believe their logic than believe the evidence right in front of them. Doesn't that sound foolish? If the thermometer tells you it is 95 degrees outside, do you argue and insist it must be 70? The tape is your thermometer. It tells you the temperature of the market. You can ignore it if you like, but you will sweat all the same. Now, the reason men cling to opinions is because opinions flatter the ego. To hold an opinion means you believe you see something others do not. It makes you feel superior. When you buy a stock because you think it is undervalued, you are saying, the crowd is wrong, and I alone am right. That may satisfy your vanity, but does it pay your bills? Prices are facts. They represent the judgment of the market in aggregate, and the market is always bigger than you. Always. So, whose side do you want to be on? The side of fact or the side of vanity? Consider what happens when you buy on opinion. You think a stock is low. You believe it must rise. You take your position, and then the price drops. The fact is against you. But your opinion whispers, it is only temporary. It must turn soon. So you hold. The price drops further. The fact becomes louder. But your opinion clings to hope. You may even add to your position, convincing yourself you are buying a bargain. What are you really doing? You are fighting fact with guesswork. You are ignoring the truth of the market for the comfort of your own voice. And tell me, how does that story usually end? When I was young and first began trading, I learned this lesson the painful way. I had opinions. Plenty of them. I would say to myself, that stock can't go lower. And it did. That stock is too high. And it went higher. I would argue with the tape, believing my cleverness could outmatch reality. I paid dearly for that arrogance. Every loss I suffered in those early years came from choosing my opinion over price. And every gain I made came from surrendering to fact, from respecting the evidence of the tape above all else. Have you not experienced the same? It is astonishing how stubborn men can be. They will cling to a losing opinion until it wipes them out. They will ignore the facts because the facts are humiliating. To admit the tape is right means to admit you are wrong, and nothing wounds the pride more than being wrong. But what is pride in this game? Pride is expensive. Pride is fatal. Do you want to be proud, or do you want to be profitable? Now let me tell you something else. Even when traders stumble upon success, it is often despite their opinions, not because of them. They will buy a stock for the wrong reason and watch it rise. They say, see, I was right. But were they? The fact is the stock went up. Their reasoning was a guess. The market does not rise to reward your theory. It rises because demand exceeds supply, because conditions align. You are confusing coincidence with skill, and sooner or later, the market punishes that confusion. Do you know what the professional does? He does not waste his time on opinions. He studies the tape. He studies the behavior of prices, the rhythm of the market. He says to himself, the facts are moving this way, so I will move with them. He does not ask whether the market is justified. He does not demand reasons. He only requires evidence. Evidence is in the price. Evidence is in the movement. That is why he endures while the opinionated man perishes. And yet, you will say to me, but surely value matters. Surely a stock must be worth something. Of course it must. But what is value without price? Can you sell your opinion on value to the market? Will the market pay you for your reasoning? It will not. It pays you only if the price moves in your favor. That is the fact. The rest is noise. Think of it this way. If a man is dying of thirst in the desert, and you have a jug of water, what is the water worth? To you it may be a few cents. To him it may be priceless. Value is subjective, but the price you agree upon is the fact. That is reality. The same holds in the market. You may believe a stock is priceless, but if nobody will pay your price, your belief is nothing but a daydream. How many fortunes have been lost by men who said, this stock must go back to its true value? How many fortunes have been made by men who said, "I don't care what the value is. I care only that the price is rising." Which side do you wish to be on? I'll tell you something that will save you years of grief. Stop asking whether the market is right. It is. Always. When the price rises, that is fact. When it falls, that is fact. You can accept it or you can fight it. But which do you think is easier? To ride with the tide or to swim against it? Most traders lose because they do not understand this distinction between fact and opinion. They think their guesses are equal to the tape. They think their theories are equal to evidence. But opinions are cheap. Facts are expensive. The tape charges you every time you ignore it. Every time you cling to your guess, it takes a toll. Slowly at first, then swiftly until your account is gone. Have you not seen it happen? Perhaps it has happened to you. Let me remind you again, prices are facts. Your opinions are guesses. The market is a voting machine in the short term and a weighing machine in the long term. But in both cases, the only record that matters is the price. The ticker prints the record. It is impartial, relentless, and honest. More honest than your emotions. More honest than your pride. More honest than your hopes. If you cannot learn to respect it, then you cannot trade. You may spend hours with analysts, reading reports, listening to forecasts, and filling your head with other men's opinions. But when you place your order, when you commit your capital, the only voice that counts is the tape. Do you think the tape pauses to consider those forecasts? Do you think it weighs your reasoning before it moves? No. It moves according to supply and demand, according to the decisions of the crowd, according to forces larger than any one mind. That is why the tape is fact, and everything else is guesswork. So the choice before you is simple. Will you align yourself with fact or with opinion? Will you follow the tape or fight it? Will you respect the market or demand it respect you? The man who chooses opinion may enjoy the satisfaction of being clever. The man who chooses fact enjoys the satisfaction of being solvent. Which satisfaction do you prefer? The market is never wrong. You are. That is the rule. That is the one truth that 99% of traders cannot swallow. They will fight it until they are broke, and even then they will blame everything except themselves. The market is not a man you can argue with. It does not sit across from you at a table, waiting to be convinced by your reasoning. The market does not listen to you. It does not care about your opinions, your education, or your cleverness. It only reflects the collective weight of buying and selling, and that weight is always right. Always. When you lose, it is not because the market is wrong. It is because you are wrong. And yet, how many men will admit that? Think of how traders behave. A stock begins to fall. The tape is speaking. It is saying, there is more supply than demand. That is a fact. But what does the trader say? He says, this is a mistake. The market is wrong. This stock is undervalued. He holds. The price falls further. The market is telling him louder, you are wrong. But he digs in deeper. He adds more. He says, the market will see sense soon. Do you recognize the folly? The man is arguing with gravity. He is stepping off a roof and insisting he can float. But gravity never makes a mistake. The ground is never wrong. And the market is the same. When I was young, I thought the market was unfair. I thought it mocked me. I thought it rose when I sold and fell when I bought. I thought it was designed to fool me. But that was childish. The market is not out to fool you. It is not even aware of you. It moves according to laws of human nature and supply and demand, and those laws have no concern for your little position. When I lost, it was not the market's fault. It was mine. Do you see the difference? As long as you believe the market is wrong, you will never learn. But when you finally admit that you are wrong, you begin to improve. The market is never wrong. That phrase should be branded into your mind. It should be the compass that guides your trading. Because the moment you catch yourself thinking, this can't be right, you should stop and remind yourself, it is right. I am the one who is wrong. How much money would that reminder save you if you repeated it each time you attempted to argue with the tape? How many fortunes are lost because men refuse to say those 4 simple words? I was wrong. What is the nature of being wrong in trading? It is not just about a bad opinion. It is about failing to act when the evidence contradicts you. You buy a stock. You expect it to rise. Instead, it falls. At that moment, the market is telling you the truth. You are wrong. The correct response is to cut, to step aside, to protect yourself. But what do most men do? They delay, they rationalize. They say, the market is crazy. It doesn't see what I see. They cling to hope, to pride, to stubbornness. And the more they cling, the deeper they sink. They will hold all the way down, and when they are finally ruined, they will say, the market was wrong. Do you see the tragedy? It was never the market. It was them. I have known traders who could not learn this lesson, and I watched them vanish. One man in particular comes to mind. He was intelligent, educated, confident. He believed in his analysis. When the tape went against him, he sneered. The market is foolish, he said. He added more. He lost. He added again. He lost more. When he was finally ruined, he still muttered, the market was wrong. But the market went on its way indifferent. Prices marched in the direction they must march, and his opinion was buried beneath them. Tell me, what destroyed him? Was it the market, or was it his refusal to admit he was wrong? You see, the trader who survives is not the one who is always right. No man can be always right. The trader who survives is the one who can admit quickly when he is wrong and act on it. To say, the market is never wrong, I am wrong, and then cut his loss, protect his capital, and wait for the next chance. That is the difference between survival and ruin. Do you find it easy to admit you are wrong, or do you find excuses, reasons, explanations to protect your ego? Do not misunderstand me. I am not saying the market is wise in a moral sense. It has no wisdom. It simply reflects the weight of transactions, but that reflection is reality. When the price is printed on the tape, that is truth. You may think it should be higher, you may think it should be lower, but your thoughts do not change the print. The print is fact. To deny that fact is to blind yourself. And yet, blindness is the natural state of most traders. Think of how strange it is. In every other walk of life, men respect facts. If the doctor shows you an X-ray of a broken bone, you accept it. You do not argue that the bone is whole. If the banker shows you the balance in your account, you accept it. You do not insist you have more money than the statement shows. But in trading, men look directly at the tape. They see the fact of price, and they deny it. They say, it must be wrong. Why is that? Because in trading, the facts wound their pride, and they cannot bear it. The market is never wrong. You are. That truth is both cruel and liberating. Cruel, because it offers no escape. You cannot pass the blame. You cannot say the market tricked you. You cannot say it was unfair. Liberating, because once you accept it, you no longer waste time arguing. You stop fighting reality. You begin to flow with it. You see the price. You accept it. You act accordingly. And that is the only path to profit. When I made my great fortunes, it was never because I argued with the market. It was because I listened to it. I obeyed it. I followed the line of least resistance. And when I lost, it was because I broke the rule. I thought the market must turn because I wished it to. I thought it must agree with my reasoning. The market did not even notice me. It went on its way, and I paid for my defiance. Have you not paid for yours as well? Let me put it another way. The market is a great machine. It grinds on, day after day, with or without you. If you step in front of it, insisting it should stop for you, what will happen? It will crush you. If you walk alongside it, accepting its pace, it will carry you. Which do you prefer? To be crushed or to be carried? The market is never wrong. You are. Etch it into your memory. Whisper it to yourself each morning before you trade. Repeat it each time the tape disagrees with you. Let it sting your pride until you no longer resist it, because in the end, it is the traders who can humble themselves before the market who last. The others, the proud ones, are swept away. And still they shout, even as they vanish, the market was wrong. Crowds always arrive late, professionals move first. That is the rhythm of the market as sure as the sunrise. The crowd cannot see until it is obvious, and by the time it is obvious, the move is nearly over. The professional does not wait for the crowd's blessing. He moves quietly, while the crowd is still doubting, still mocking, still asleep. He positions himself early, and when the crowd finally wakes up and rushes in, it is his turn to sell to them at a handsome profit. That is how the game works. Always has, always will. Watch how the market behaves. A stock begins to rise from a long period of inactivity. The move is quiet at first. A few professionals notice it. They buy. The stock rises a little more. The public looks at it and says, "That's nothing. Just a small bounce. It will fall back." They ignore it. The stock rises further. The professionals add to their positions. The crowd still shakes their heads. "It's too high," they say. "It can't last." The rise continues. Now the crowd begins to murmur. They start to watch it more closely, but they are afraid. They wait for a pullback that never comes. Finally, after the stock has doubled, the crowd can't stand it any longer. They pile in, shouting, "It's going to the moon." That is the very moment the professionals, who bought early, begin to distribute. The crowd is late, as it always is, and the professionals are ready, as they always are. Tell me, which side do you want to be on? This cycle repeats endlessly, because human nature never changes. The crowd cannot believe in a trend until it is undeniable, and when it is undeniable, it is already too late. The professional knows this. He does not argue with it. He expects it. He anticipates it. That is why he is always one step ahead, and the amateur, blinded by the need for safety in numbers, always lags behind. Why does the crowd move late? Because the crowd wants certainty. They want proof. They want reassurance. They do not trust their own judgment, so they wait until everyone else is talking about it. They wait until the newspapers print headlines, until their neighbors are whispering about the stock, until it feels safe. But by the time it feels safe, the profit is gone. Professionals move when it feels dangerous, when the crowd is still in doubt. That is when the big money is made. Look back at every great market move in history, and you will see the same pattern. The great bull markets always began when the crowd was still licking its wounds from the last bear market. Prices crept higher, quietly, while most men swore the rally would not last. Only the professionals bought. Then, slowly, the move gathered strength. The crowd still doubted. They muttered about how dangerous it was. They said, "It's just a trap." The market kept rising. Finally, when it had gone too far to ignore, the crowd poured in, convinced they were buying into a new era of prosperity. That is when the market was near its top. The professionals, who had been in since the beginning, sold to them. The cycle turned. The crowd once again was late. Do you see the cruel trick? The crowd demands proof, and by the time proof arrives, it is useless. The professional does not need proof. He reads the tape. He reads the price action. He sees accumulation when it is invisible to the untrained eye. He sees distribution before the crowd has the faintest suspicion. He acts on what the tape tells him, not on what the newspapers shout. And that is why he wins. The crowd also arrives late on the downside. When a stock begins to fall, the professionals see the weakness first. They sell quietly. The crowd calls them fools. Why sell such a fine stock? It will bounce back. The price falls more. The crowd says, "Now it's cheap." They buy. The professionals keep selling. The price falls further. The crowd becomes uneasy, but they hold. Finally, when the decline has ravaged their accounts, and the stock is selling far below where the professionals sold, the crowd panics. They dump their shares at any price, and who is buying from them at the bottom? The professionals, who sold early and are now positioning for the next rise. The crowd is late again, just on the other side. Have you not seen this yourself? Have you not felt the pull of the crowd's emotions in your own trading? You see a stock rising and you hesitate. You want to be certain. You wait. It rises again. You wait longer. Finally, you can't bear missing out any longer, so you rush in, just in time for the pullback. Or you see a stock falling and you tell yourself it's only temporary. You hold. It falls more. You wait for the rebound. It never comes. At last, in despair, you sell. Just as the professionals are quietly accumulating. How many times must you repeat this before you learn? The truth is that the crowd cannot win, not because they lack intelligence, but because they cannot act alone. Each member of the crowd looks for confirmation from the others. They want to feel safe. They want to know they are not making a mistake. But that very desire is their undoing. Safety in the market is an illusion. The real safety is in moving before the crowd, not with it. Consider this: the professionals are few, the crowd is many. If the crowd were early, who would sell to them? Who would take the other side of their trades? The professionals exist because the crowd is always late. That is the natural order of the market. It cannot be changed. The only choice you have is whether to behave like the crowd or like the professional. Which will you choose? Do not imagine that being a professional means having perfect foresight. It does not. The professional is wrong often, but he is wrong early. When the cost of being wrong is small, he cuts his losses quickly. When he is right, he rides the move as the crowd floods in behind him, pushing prices in his favor. The crowd, by contrast, is wrong late, when the cost of being wrong is ruinous. And when they are right, it is only for a short while, because they bought near the end of the move. Do you see the difference? It takes courage to act before the crowd. It takes nerve to buy when the crowd mocks you, to sell when the crowd scorns you. But that is the price of profit. If you wait for the crowd's approval, you will pay for it with poor prices and late entries. You will always be behind. The professional pays in courage. The amateur pays in losses.